Polkadot ready to explode by 600% in the coming weeks and months. Is that the case? What's the probability? Man is looking healthy. We know Polkadot is a powerhouse project, but today we're going to look at the price action. We're also going to go back to look at our previous analysis to see how it panned out. So if you like today's video, like, subscribe, hit the bell notification. My name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been trading currencies for over 15 years, been featured in the best-selling book, High Probability Trading Strategies, back in 2008. Now I focus on crypto and blockchain. So let's dive straight in. I did a video, I believe the last one was on July 25th. And what we said was the market looks like it's making a nice A, B, C correction, and we're coming towards what looks like the end of a wave C of a wave 2. So the theory on this is this part here, this part of the market, right? If I just do this, the market tends to unfold in 5 patterns, 5 ways, 1, 2, 3, 4, 5, and then an ABC correction. That's a macro scale. But if we now look at the micro scale, 1, 2, 3, 4, 5, A, B, C. So basically, this is what I'm seeing with Polkadot. So this is the theory, and then we're going to go into the practical. This beautiful move to the upside since January, right? A massive move to the upside, and then we had this big correction from $50 down to around $12, and that's where we are in the chart. What I was doing on July 25th, this part here, A, B, C, and then what I said is likely to occur here is some type of strong movement to the upside, correction that's most typical, and then further on in the video, I said then we should see a continuation of the trend for this wave 3. So 1, 2, 3. Again, theory. You got a 1, 2, followed by a 3. Just to make it crystal clear, 1, 2, followed by a 3. There's particular Fibonacci ratios which allows us to project the price in advance. That's how we projected the wave 2. So let's see how bang on we were. Did we get the analysis right? It's not about being right or wrong. It's about probabilities. And sometimes you get it bang on. And when the market unfolds, in particular patterns, it becomes relatively simple to identify. So let's take the data back to where we were. So this is pretty much the same date. As you see, this blue line crosses the red. We'll see this zone here, this part of the market. This is where I've taken the date back to. Let's see what happened. So let's just see where we are today. Let's just let the data unfold over the last few weeks. Boom, textbook style. Look at that. Bang. The market. We seem to have pegged that literally within the day. Within the day, we said, I think it was, whatever date that was, this part of the market, we can see that the blue line has crossed over there. That was roughly around here. So it must have been July 22nd. We filmed the video. It got posted on the 25th, and it's really reacted to that price and pattern zone cleanly. So what should we anticipate next? Well, let's have a look. Well, let's look at the shorter term first. So remember the second part of this video, in this part I said market tends to move up and then you typically get a correction. What do I mean by that? Well, it's this part here. There's wave 1 and then a wave 2 of a wave 3. So this correction here is what's looming. So I'm anticipating some type of correction. Normally it's at least 50% in terms of 50% pulling back. We should be aware of that because the price doesn't just move in one direction. You can see this over here. So it's kind of like this, what we're really talking about is move up, correction, move up, correction, move up, correction, move up, bigger correction, move up, and then a bigger correction on a macro scale. That's just the nature of the markets. Buying, selling, psychology, fear and greed, optimism, pessimism, and so on and so forth. Profit taking is going to be apparent in all markets, especially crypto. So what should we anticipate? Well, let's just keep the macro picture. We'll do two things. So we've got a bearish reversal here. So I think we're due some type of correction. So anticipate 50% correction. Let's just do a quick one so you can plan. If you're looking to buy into Polkadot, anything can happen, but likelihood is if this is the local high, I'm not going to go into too much detail on the local high, but if it is, you should anticipate 50% correction, which means the price could potentially come back down to around $16 to most typical maximum is $13, right? So there's a price zone for you, and how long that takes. Well, if this ends up being the local high over here, typical time taken for a wave 2 is 50%. We don't know if that is the high, but if it was, you can kind of just plan your in your diary. Typical minimum is August 24th. August 24th, which is 50% projected forward of the movement to the upside. So you got a bit of perspective there. But what I want to focus on today is what I started the video on. Will Polkadot do 600% from today's price? You know, if it pulls back, then it'll be a higher percentage, right? So we're going to do that math as well. So let's just look at this. So again, just want to make sure we're on the same page. Got this wave 1. We're looking at the macro picture. What looks to be a wave 2, ABC of a wave 2 formed. What should we anticipate next? What we should anticipate, let me just do it like this, a wave 3. Bang, wave 3, right? So that's what we're going to project right now. Is it guaranteed? Absolutely not. Is it likely? Yes. Is Polkadot a powerhouse? Absolutely. So the basic number is, we're going to use Fibonacci, trend-based Fibonacci extension. We're going to measure this low to this high. So we're measuring wave 1. In fact, let me just show you what I'm doing. I'm going to measure this low to this high. And then we're going to project it forward with particular ratios from this wave 2 low. This is important to know, because sometimes when you just see lines, you just think it's confusing or whatnot. So we're going to project it from this, what looks like this low. So first I'm going to click on 100%. 100% because it'll be the top of this arrow. Yeah. But then 1.618 just adds 618, as in 62%. It adds it on top. And then 2.618, that's the mathematics, right? That's the great thing about TradingView and software like TradingView. It makes it easy for us to do Fibonacci price and time projections. So let's just get these into perspective. All right, so we've got 2 price zones. So I'm projecting the top price zone here, saying we're adding this much. That's the typical maximum wave through. If the price just explodes and it goes very bullish, Bitcoin gets bullish and the whole optimism of the market comes back and retail is FOMOing in and institutional money is kind of really pouring into projects like Polkadot, you know, the maximum, typical maximum is 2.618. Typical minimum of a wave 3 is 1.618. So we've got a price zone from $82, or just under $82 to $124. So today's price is $20. Let's pull up a calculator. This is where I got the 600% from. So we just say, look, the projection, again, this is being optimistic, 124 divided by today's price. Well, it's not today's price. 124 divided by today's price. That's the problem with these calculators. Sometimes it's difficult to click. It takes more time. 124 divided by today's price. It's like not liking me today. Oh, here we go. 124, third time lucky, divided by today's price is 620%. That's what 6.2 means. 6.2x means 620%. However, now I want to take a couple of things into consideration. Doesn't mean now's the right time to buy, because look, the market's overbought. We've got a bearish signal, big move to the upside. We haven't had a pullback yet, so we should expect some type of pullback. You know, it doesn't mean it's guaranteed, but if you're patient, you might be able to buy it at a better price. So rather than buying at the whole high and then a pullback happening, you can actually just be patient for at least a 50% pullback, because WD Gann said one of the safest times to buy is on the first pullback, right? As long as this low is not exceeded down here. Now, if it pulls back, like we said, to let's just say $15, what does that do to if we reached $124 from $15? Because when we did this video here, the price was, I think it was $12. Was it 12? Yeah, $11, $12. So if you took action down here, obviously you'd be like nearly 2x up, as in 100%. But let's just look at this. So we've got 124, which is that optimistic price, divided by 124 divided by 15 gives us 830%. 830%. You get extra 200% if you manage to buy it. That's 50% pullback. It's only $5, $20 to $15. But when you multiply it and you hold, then all of a sudden it's a different ballgame. Now, I wouldn't suggest that you just hold one position there. I would look to take maybe some profits out of 2x, 3x, 4x, money off the table, and then the rest let it ride. So let's just finish off with time. Not what time it is, but how long will it take to form a wave 3 high? Well, typical, you might have seen me do this before. It's the same time it takes to do a wave 1, what we're deeming to be a wave 1 now. is often the same as a wave 3. Oh, here's one that I drew earlier. Look at this. And then typical maximum is a wave 1 to a wave 2 for a wave 3. The time it takes to the wave 1 to a 2. So what we're doing here is measuring this distance from here to here and projecting it forward. And what you'll see is we've got this here. And then we're also going to I'm doing this fast because I just want to get you the information. So we're not in teaching mode today. We are going to do 1.618 and 2.618. So now we've got two clusters, right? We've got two price zones and time zones. We've got this one up here. And we've got, if I just copy and paste, sometimes it's easier if I just copy and paste. And then I can just drag this one down. Yeah, so this is us being conservative, saying, look, time and price. And then we got more of a, we want to be prepared that the market might really unfold to this. Now, what will help us nearer the time, if it does unfold this way, as the market unfolds, it provides information, it provides psychological information, and it tells us, hey, the market is looking and feeling like this, more optimistic than anticipated, or not as optimistic as anticipated. So as the market unfolds, the 1, 2, maybe something like a 3, 4, and as we start forming this 5, it may look something like this. And as these waves, we get more data points, we can project with high probability which one of these zones is more likely. But at this stage, we have no idea. We just don't have the information. So there's no point saying which one's more likely. But we know minimum, maximum, if it unfolds as anticipated. So there you have it. Some really high level. Like we banged, like it was like a nail on the head. Talk about nail on the head, right? This one here. We said down here, bump, we should get this move. We pegged this to the T, pattern, price, time, momentum, bump, 4 things telling us this is a likely low, not guaranteed, but it's likely low, and we pegged the bottom. You know, that's difficult to do. But if you've got Elliot with Fibonacci technical analysis, then it's not so hard. But normally people say you can't buy the bottom and sell the top. I go, well, maybe you can't, but you can, because we pegged this, right? And now there's certain risk management strategies that you can do, because you should always anticipate a minimum of 3 moves. So even if we're totally wrong about this, by the way, we should still anticipate a minimum of 3 moves like this. This should be minimum profit taking zones. You know, protect yourself from the downside, because look, anything can happen. This can turn into a complex correction. So it doesn't mean it's guaranteed. Absolutely important that you understand that. We're not in the game of certainty, we're in the game of probabilities, right? But then once we've taken our risk management over here, ideally risk-free at this kind of stage, because this will be what, $34, and we was talking about $11. So that would have been a 3x, exit a third at that point if you manage to buy down here. And then that just gives you peace of mind to hold for these bigger moves, because big money is made in the big moves. So there you have it. If you like today's video, Polkadot, powerhouse project, we know that, substrate, you know, partnered sister with Kusama's partnered with Polkadot, you know, partnership, they're just doing brilliant things. Like today's video, like, subscribe, hit the bell notification. Let's finish on a quote. Think and Grow Rich, still on this book. All right, here we go. I'm going to read this first part of this chapter, chapter 9. All right, I like this. Because the power of the mastermind talks about the 9th step to riches. This is the first section, says this. Persistence creates faith. From faith comes power. And power is essential for success in the accumulation of money. Persistence creates faith. From faith comes power. And power is essential for success in the accumulation of money. There you go. That's what Napoleon says. I think he's right. Faith, persistence, be persistent, get that faith. Faith creates power, and power is essential for the accumulation of money. Keep doing what you're doing. I'll see you very soon.